And it is time for the Word on Wall Street. Top investors watching your money. Joining me right now is Bull Tick Capital Markets Chief Strategist Kathryn Rooney Vera. Kathryn, I'm wondering if one comment we get out of this earnings period is going to be about Russia. This morning we see Societe Generale among the latest banks to pull out of Russia. Jamie Dimon said that it could be $1 billion losses as a result of pulling out. Let's talk emerging markets and what's in these indexes. The World Bank is predicting Ukraine's economy to shrink by 45% this year. The World Bank also forecasting Russia's 2022 GDP output to fall 11.2% as China's March producer inflation surged 8.3%. Stocks dropping more than 3% in China as the country continues to face lockdowns in Shanghai. Kathryn, a lot going on here. Parse it all together. What does it mean for our money?
Sure, and if you're playing the emerging market space, Maria, it favors certain regions over others. In every conflict, in every crisis, there's winners and losers. And in this case, in a broad context, because we have limited time here, within emerging markets, Latin America is the winner. Emerging Europe, Asia is going to have a tough run and already is. Latin America is picking up market share. Remember, these are commodity exporters. They're picking up market share from what is, between Ukraine and Russia, provider of 40% of the entire world supply of wheat, for example. So we like Brazil, we like Latin America over emerging Asia and emerging Europe. China, I will say that I do think that there are opportunities within the space, specifically in consumer discretionary. This is a structural call, so on weakness, and for clients who are looking for alpha and have a higher risk tolerance and are willing to deal with a bit of volatility. Consumer discretionary sector within China, I think, is so beaten up that it has room to rally over coming years. For those long-term investors, I think that makes sense. Ukraine is going to, of course, shrink as we've heard, 45%. That's because half of all of its businesses have been shuttered. Infrastructure, critical infrastructure is decimated. This shouldn't be a surprise for everyone. Europe is going to continue to decrease in terms of economic activity, but I think there's a price for everything, and we're currently looking at opportunities within European assets because we've seen record outflows in terms of portfolio capital there.
I think you make such a great point on that, Kathryn, because most people expect a recession in Europe as a result of what's going on in Eastern Europe. You still want to find opportunities even if we were to see a recession in Europe, Kathryn?
Yes, I think in terms of broader Europe, we're talking more specifically, Europe versus Europe. Within Europe, I think you can have select opportunities. Recession is very likely. So if you see record outflows like we've seen in the past 1 month, I think there is opportunity to add to positions within European exposure.
All right, Kathryn Rooney Vera, always a pleasure. Thanks very much for weighing in on all of that. Have a good Monday, and we will see you soon.